Ladies and gentlemen, good day and welcome to MCX Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. P.S. Reddy, MD and CEO, MCX. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody. Welcome to this, analyst call. This quarter is along with me, our COO, Chief Operating Officer, Mr. Manoj Jain, and CFO, Mr. Bolar, and Mr. Praveen DG. He is the Head of Investor Services. Is there. And I would start with my comments on the results. Yes, this quarter in terms of revenue from operation has been exceedingly well, thanks to the options contracts, and that have done really great and helped us to put the situation. But you all know that technology platform has let us down. We couldn't migrate it, whatever the reasons. And now that we have negotiated once again, and then there is a offer kind of thing. There's nothing called a 1 quarter offer or anything, but it's a 2 quarters minimum. And that's the way we went ahead and then taken an additional 2 quarters. So for each quarter, we'll be paying 81 crores. That is again is going to dampen our future results. But I think our focus at this point in time is something is inevitable. It is inevitable, and we as an exchange which have been charged with the responsibility of making the platform up and running 24/7. We have no choice. It's a responsibility that we have to discharge with the SEC regulations otherwise. And I think that is in one sense, we are feeling proud that we are being trusted and we have been given this responsibility of running the platform. On the other hand, we are feeling that it is a, what should I say? It's a point of weakness, for which reason we had to pay without much negotiation, whatever has been asked for. That is the way it happened. But anyway, our focus should be to make sure that our revenues increase going forward by introducing more commodities as well as deepening the existing lines of products. And other than these expenses, whatever we are supposed to be incurring in the next 2 quarters, that is the current quarter and then quarter in the first quarter in the next year, all other expenses we will and make every effort to keep them under control. I think that is what the focus has been at this point in time, and everybody is very supportive of this particular approach, and we are hopeful we should be able to make the platform live within this extended time that we have got. With these words, I will leave it open to all of you for questions, if any, on our results. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yes, good afternoon, sir. And thanks, congratulations on a very, very good set of revenues number for the quarter. My first question is, sir, what is the timeline we are looking for the implementation of the new software? And do we have anything which we can get from TCS because of this huge delay?
Okay. As far as the timeline is concerned, I think, as I said, these 2 quarters are available, but we will not fully consume. That's not our intent. I think as early as possible we should go ahead, and that's what the plan of action will be. We propose to launch mock as we did earlier. Again, we will release a full force mock to the member brokers in this month, and members also will be given a very clear roadmap within this period, when we will exactly go live. But we will be communicating it, but I can't specify the date, but this is the roadmap. Now, as far as TCS is concerned, of course, it is also driven by the agreement, and the agreement does provide for penalties vis-a-vis the delay in implementation or delay in go live.
So when will you get the entire clarity on the timeline?
In the next 1 month to 1.5 months.
Okay. My second question is, sir, of course, the software implementation happening as of now, but do we have any plan to launch the new contracts, especially given that the SEBI has allowed the stock exchange, the stock exchange to launch multiple contracts of a commodity? Are you working on some long-term measures?
Yeah, the mini contract is what SEBI has permitted, and I think we have already applied to SEBI. We are expecting any moment approval from SEBI for launch, and as soon as we get it, maybe we will be able to launch.
Are we looking to introduce multiple contracts across multiple commodities, or it's only restricted to some particular?
No, we had applied for 3 of them at this point in time in metals, base metal contracts. We have also applied in energy products also. I mean, we will be applying, we will be applying because the regulatory process within the internal MC, within MCX is on. So once that is done, we will send it to SEBI for their approval, the energy contracts.
Is there a third one, or metals, energy, anything else?
Come again?
You said metals, you said energy, sir. I thought you said that there are 3 products which are looking to launch, right?
Energy, no. I'm saying in energy you have 2, no? The both.
Yes, okay, understood. Okay, understood. Thank you, sir. Thank you, and best of luck, sir. Thank you.
Thank you. Next question comes from the line of Avinash Singh from MK Global. Please go ahead.
Yeah, hi. Good evening. On that software contract, so my question is, due to this ad hoc rollover of this contract over 3 quarters, perhaps you will end up paying almost like 180 crore or so extra. Now, you had expected, a cost saving by shifting from one vendor to the other. Now, what kind of a payback period, if we were to sort of keep in mind this 180 crore cost, what kind of payback period will allow you to save this much of cost? If you can just provide some color, to understand the difference between these 2 contracts. Thank you.
No, I think in the case of the TCS contract, we said that it will write off over a period of 6 months, and there may not be much difference because of the depreciation being also high. After 6 years or so, not 6 months, after 6 years also, it will see that results. So this is whatever we have incurred now. It's not a capital expenditure. It's a revenue expenditure. So obviously, it's kind of done and gone out of our this one. I don't think we can amortize any of this and then say that the payback is changed. I am not comparing it that way.
Okay. Yeah. So forget these 3 intermediate quarters. So assuming that from the second quarter of FY24, you are on to a TCS contract. Will the software expenditure run rate be similar to where it was till Q2 till Q2 of this year? I mean, what kind of
Should be. That is what I'm saying.
It would be in that range.
It should be that way.
In addition, there would be additional amortization.
Okay. Oh, thank you.
EBITDA will be better, but the depreciation amount will be added little more. That's what.
Okay, thank you.
Thank you. Next question comes from the line of Sujit Jain from Ask Investment Manager. Please go ahead.
Sir, if you can give the transaction fee for options for this quarter.
₹53 crore.
And so the other operating income then comes at 26 crores for the quarter, right?
So you said options, isn't it?
Yeah. So I'm
53 crore was from options.
143 minus 53 minus 64 crores from future remains 26 crores other operating income.
That's right.
So higher compared to a quarter, base quarter, and as well as QOQ. What leads to this higher number?
See, one is, we have been able to, through our vault charges, because this is a consolidated figure, which also includes, we're comparing the consolidated, which also includes the revenue that we have got from CTL. So that is the vault charges.
That would be there in the base as well, right?
Yeah, that's right. So mainly it's the transaction charges on option, and also as a clearing corporation, gets a lot of some cash in the margins in cash, which is then deployed and which is forming part of our operational income.
Okay. And this charge that you mentioned, which gets paid to 63 months for the quarter, 61 crores. So the way to look at this is basically you pay roughly 4.5 crores per quarter plus 10% of transaction fees. And then that works out to something like 16, 17 odd crores. Amount over and above that is actually the additional charge that is to be paid in this quarter, right? That's the way to look at it, right?
No. You see, usually we pay 15 crores per quarter under the old agreement, okay? Or little less depending on the volumes, obviously. These are turnover-based fees, okay?
Right.
And instead of paying 15 crores, we paid 15 plus 45 crores in the quarter ended December. And in the next 2 quarters is going to be 81, which means about 65 will be extra.
Yeah, perfect. And the other thing is that if you can just give the split. So, for example, there will be some portion of quotation fees that are being paid to CME, which will be a part of the 67 crores software support and product license expense for the quarter. How much that number would be?
That is a balance, 67 minus 60.
Okay. And in terms of the mini contracts, just to understand this, and just correct me if I'm wrong anywhere, is that you already have mini contracts in bullion, both silver and gold. It is in base metals and in energy, you'll be launching them, right?
Subject to approvals, yes.
Yeah. So that is that will probably lead to higher ADTV eventually in options. And apart from that, in gold, you have bi-monthly contract. Do you have a monthly contract in gold? Gold mini in options. Contract.
Gold mini is there.
Which is a monthly contract.
That's right.
Is there a further case of reducing the size of this, going for a lesser maturity and therefore expecting higher volume even from there in any of the commodities from where we are currently in terms of the maturity of a contract?
No, these are all the combinations that we keep discussing and then working with the regulator. And we did look at the monthly, fortnightly contracts, etc. and in options. I think as we go along, I think we will try to move and make an attempt to launch such contracts subject to regulatory approvals. Yes.
Which are the commodities where you have fortnightly contracts, and which are the ones that you eventually will be launching?
We don't have any so far.
but eventually in future there's a possibility.
That's right.
Right. And one last question is, how much of your commodities which are to be compulsorily converted into physical delivery end of the contract period gets actually converted into delivery? So you give some data from the inception till date. You also give every quarter how much got converted into in terms of tonnage. But in terms of percentages of the notional value, how much actually gets converted into physical deliveries?
See, as I said, we are a lender, last resort for delivery, and the commodity, I mean, these derivative markets are not meant for delivery as such. Delivery is only a threat to the people to make sure that prices move in tandem with the spot prices. And so going by that, the percentage will be 1%, 2% of the total ADTV or even less. Okay. So it depends on that kind of situation. That's the way it is.
So you're saying at exchange level, across all commodities put together, it will be somewhere between 2 to 3%.
Each commodity also comes to that only. Each commodity also comes to that only.
Right. Perfect. All the best. Thank you.
Thank you. Next question comes from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi everyone. Just a few questions. Firstly, let me just clarify this. Like for the past 3 quarters from the time this TCS contract has been getting delayed, 3-4 quarters, we have been saying that the impact on cost, which include the software cost and adding depreciation or amortization, whatever it is, together will not be any different from what we were paying pre-volume, the extension. But post that our volumes have really surged. Do you still think that there will be no implications of even at the current volumes? At what volumes really that will make us start making a difference?
See, the question that has been asked all along is the contract with 63 months, that is prior to September, versus the TCS contract, would that yield any higher, which would leave more margins on the table is what usually being asked. It's not vis-a-vis our ADTV or the volumes. So it is in that context we have been saying it. It doesn't make much difference because in one case the fee itself is high, and the other case it is in the form of amortization, etc. At the end it will be high. So at the end of the day, the net profits will be more or less will have the same impact under both the contracts. But having said this, you have seen our fixed costs are by and large, our fixed costs are by and large are under control. The only difference, marginally it would have been made is because of the increase in volumes, we would have also ended up paying more to 63 months or a vendor had it been a revenue-linked contract vis-a-vis the TCS contract. But that would not have been so much of a difference. That's the way I look at it. You are right to that extent of variable payment to be paid to the vendor vis-a-vis TCS platform.
Okay. So even at current volumes, whatever we have today of in 3Q of options and futures, and let's assume that this was not at 60 crores in this quarter. Let's assume it was 15 crores. But still, it wouldn't have been more profitable in case we were on TCS software. That is the right assumption to make.
That's right. Correct? That's right. And in fact, had we had the same trend continued with whatever the pre-September, probably our net profit would have been about 92 CR, something of that kind.
Okay, got that. The second part of the question is on the product launches. So earlier you had mentioned about the monthly options on gold contracts would be on the new software. Do you still stick by that, or would you launch on monthly contracts on monthly options on gold futures on 63 month software as well?
See, we don't have a problem in launching the current platform. Okay. But if I launch it, when I migrate it, I must ensure that all existing products are seamlessly migrated to a new platform. So we need to see that tested in the new platform. Once that is there, then I can launch even the current platform also, so that we we know it will seamlessly migrate. That's the issue.
Okay. And sir, could you just give me a step-by-step approach to this, in the sense that what are the milestones that you would be looking at? So first you see, now you're doing the mock again, complete full mock again. Then whether you'll have parallel runs, or whether you'll have parallel runs across commodities, or so what will be the milestones of this transition?
Yeah. One is that parallel mocks will be done. Mock is with the member brokers, etc., and that will be for a long period. And parallel runs are also done simultaneously, which is internal to us. We take the data from the existing system and pump in the data into the new one and see the outputs, whether they are coming properly or not. So that is a parallel run. So you can do it in a day, 2-3 parallel runs also. 2-3 days data you pump in each day, then you look at the results. So that is another possibility. We will be looking at it. The third dimension is the performance optimization. So while we have targets achieved in the NFR to the current production requirements, in the non-functional requirements NFR means, so it's already that's already achieved. But when you put all the security apparatus on the system and then see that how it behaves, so cyber security related aspects are also already implemented, and so the audits also we have to do it afterwards. After performance evaluation is done, performance testing is done, post implementation of cyber security and other various security measures, then we will have to get it audited, both the system auditor, VAPT, all the cyber security audits. Then thereafter we will go live. That's the process.
Great. And so one more question on the TCS contract. So in case you are ready to move to TCS software, say earlier, say by 31st March itself, you are ready to shift by all these steps that you have mentioned are all done by 31st March. Do you still have to pay for the 1Q?
It is it's a take it or leave it for 2 quarters kind of contract. That's the way it is. That's why we have to.
So in a way, 63 will be there for 2 quarters, or we have to pay for it either ways.
That's right.
Right. Okay, great. Thank you so much.
Thank you. Next question comes from the line of Parth Agarwal, an individual investor. Please go ahead.
Hi, thank you for the opportunity. I just wanted to know the cash balance on the books.
Yeah, 918 crores as on 31st December.
Okay. And just a second question on the platform that we're trying to develop versus the existing platform that we sourced from 63 months. Is there any stark difference between the same, or are we just trying to replicate the existing platform?
See, functionality, there will be some superior features will be there, but at this point in time, ever since we sensed the delay, we have given what you call a core functionalities which are needed as is various basis kind of thing. So we are going ahead with all these functionalities that are needed for us to run the market as we have today. That's the way I see. And the other forward-looking features will be coming up in phase 2 post go live.
Okay, good. Thank you so much.
Thank you. Next question comes from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thanks for the opportunity, sir. I wanted, so did you mention the quantum of liability clause for the TCS due to the delay in the contract?
I think these are, specific to the contract. It's not good to disclose, please.
Okay. And sir, also about the product launches. So when are we looking to launch the electricity contract?
Oh,
Because
that is
given
a long pending wish of us. It's now almost all 2 years, and I think only when it comes I can say yes, it has come. But till then I do not want to make any promise. But then our efforts are there constantly. We are at it, requesting the regulators to approve it.
Okay. And just a final question, sir. If we get the approval for the 3 contracts from SEBI for the mini contracts before, say, June 31st, and we are still using the current system, so will we still launch these products on the old system? Okay.
Yes. There's no problem on these. These are simple variants. That's all. There's no problem.
Okay, sir. No, that's it.
Thank you. Next question comes from the line of Umakant Sharma from Rises. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. I have a few quick questions. Firstly, when do you intend to start the mock trading with a new technology partner, and how long would you need to run it parallelly to make sure that both the new platform runs effectively? Because I'm asking this question in light of the fact that BSE when they had to run it parallelly for nearly 2 years. So could you throw some color around that?
See, it all depends on how intensely we will be undertaking this activity. Maybe BSE have done it for 2 years. Somebody else may have done it for 6 months, and it all depends on what is the preparedness of the exchange on this. As you know, on 7th November we launched mock trading. For a long time, for a month and a half, 2 months, it has continued. Then after picking up all the observations, etc., we have again refined the system, and we will be launching in this month. So since we have the time, we will be able to do little longer mocks. But it is important for us to ensure that all the members participate. So that is where we have been hand-holding them. And in fact, I would say 90+% of the business is covered by the members who have participated in this. Almost all 380, 90 members have participated, unique members in that sense. Everybody may not participate every day. That's a different matter. But everyone has tested the systems. And in the second run, what we are planning, I'm sure a maximum number of participation will come through. So, as coming back to your question, there is no standard reply for that or standard that is established. As long as we get if we zero in on the defects, and as long as the number is keep tapering off, I think that is we are done kind of thing. And as I am speaking internally, every day testing is taking place. Every day. I mean, it's almost all about 30 people testers are doing it. So it's not necessarily members themselves do it. In the name of members, in the sense, some members' IDs are created, and our own people are testing it as if they are the members. So I'm sure that also goes a long way in refining the system. Thank you.
Absolutely, sir. Absolutely. So a few quick other questions. So we have paid nearly 60 crore to 63 moon for the September-December quarter and committed about another 162 crore for till June, right? So wouldn't it be more prudent enough for us to buy off the entire IP asset from 63 moon technologies at a mutually agreeable price? Even let's say if it's 1,000 crore and we can write it off and we can capitalize and write it off over the next 3 years, wouldn't it be a much better prudent thing to do?
You see, we have to keep the interest of all stakeholders in mind when we take any decision. That's how the board has approached it, and we are also a public institution. So whenever we get into any negotiations and etc., it has to be a very transparent approach. So that is why we have floated an RFP. Probably had 63 months chosen to participate at that time, we would have definitely evaluated, and maybe they would have got, they scored a few brownie points, and few points also to their credit, having been an existing vendor. But they didn't choose to participate. They chose not to participate. So that has caused some kind of this one. But yes, now it is behind us. I don't think we will be able to revisit this issue at this point in time.
Okay. And just one final quick question, sir. So there has been too much of back and forth in terms of this whole migration from technology standpoint, right? And we investors, we see the numbers, getting hit on the profitability side for our company, right? So is there a possibility that you could evaluate, that the board could evaluate rather, in terms of terminating the relationship with TCS and retain 63 Moon, so that there is no, and operate the entire, continue the operations in status quo?
We will take your suggestion before the board. Thank you. That's all I can say. I have no comments.
Okay, thank you so much.
Thank you. The next question comes from the line of Harish Iyer, an individual investor. Please go ahead.
Thank you, sir, for the opportunity. Sir, again, my question is more fundamental. So, sir, in our meeting with various investors and specifically with shareholders on 16 November, we have said that, the overall cost, and which even today you mentioned, it will be at the same level which we are paying to 63 Moons. So in a nutshell, we are paying the same cost, and we don't own IP, right? And eventually, we, again, after a few years, at the mercy of TCS, because, again, we have to buy out IP from that. So, sir, again, this question is more fundamental. Technology is the heart of the business, and even, sir, the market feedbacks are not encouraging regarding the new technology. While we are putting, this entire system at risk, and there is a clear-cut existential risk for the MCX stock exchange, because, so time and again the deadlines have been extended, and even today we are not sure when this will go online. So these are really serious concerns, and obviously you and board is working in the interest of shareholders, but right now it is completely going against us, because even at the current volume, if we take this cost, next 2 quarters we are going to make a loss. We have already spent 15% of the net worth in just last for this cost alone. So there is no rationale, sir, as such, for us to go with the change in technology. You yourself have mentioned there is no difference between the two technologies. So I am really baffled at understanding what is the reason for all this change. I mean, we are just, incurring heavy costs here, and which is ultimately hitting not the network and bottom line, but really shareholder value, sir. And these are really critical questions that management and board have to rethink.
Yeah, I think I have never said that there's no change there's no difference between the two systems. There are technology issues. There may be differences. There are differences. When it comes to the financials of it, impact of this 63 Moons platform versus the TCS platform, from that point of view, you said it doesn't make in the next 6 years any great difference. I didn't say that technologically whether they are different or not different. I don't think that comment I have ever made. Having said that, I mean, as I said that this is the decision which we can't take at this point in time, and I'm sure board is. You are all aware that we are seized of this matter with a great with a great reluctance that this contract had to be extended. As in the beginning I said, we are responsible to make sure that the markets run, and it is that regulatory obligation which drove us to honor our discharge our responsibility, and maybe that is also our weakness in that sense, that somebody or anybody can misuse. Anyway, thank you.
Thank you. Next question comes from the line of Lavanya Totala from UBS Investment Banking. Please go ahead. Ms. Lavanya, please go ahead with the question.
Hi, am I audible? Hello?
Yes, you are.
Yeah. Hi, sir. Thanks for the opportunity. So here on the new products launch, I just wanted to get clarity that once our whole monthly contract options are ready, we are fine launching it even on the existing platform. Is the understanding right, sir?
What we want is that once it is tested in the new trading platform, and then we will be launching in the existing. That is the way I said. So when actually we migrate it, all the existing contracts will be seamlessly migrated to a new trading platform.
So this has to be ready in the new one first then?
New one first, that's right.
But this isn't the case for the mini contracts, but that...
No. Mini is not. Mini is just a plain vanilla features contract.
Mm-hmm.
Okay.
Got it, sir. So other one is on the like timelines or the deadlines which we have for TCS. So this is the second mock trading session which we are doing. So is my understanding right that parallel run will start our second mock trading which we do, or this parallel run is happening simultaneously?
Parallel run is simultaneous. In the parallel run, members will not participate. It is just that you take the data, all orders you take it, pump it into the system, get the outputs, match it with whether the 63 moons output as well as the TCS output is the same or not. These are the parallel runs, which are back end it happens. Mock is actually member brokers participate, which runs whatever is the timeline, and different orders are placed, all that kind of thing. So the mock is very critical. Parallel run is important. Anyway, we have to ensure data integrity. The outputs are the same, no doubt about it.
Okay, got it. So now the parallel run is happening currently, or is it yet to start?
Yes, it is happening. It's happening. Parallel runs are happening.
Okay. So, sir, can you just help us understand what are the key issues that you are facing with TCS platforms, like any broad key issues that you want to highlight?
So, the key issue as we have faced, the TCS systems teams have faced is the integration challenge, and I think now they have overcome. And the seamless flow of data and between the T7 and the banks, and then again back and forth it happens while going through was the challenge. That was a major challenge, as I said. So that has been addressed. I think we should be able to now fix other functionalities.
Okay, got it. So, and on this one which you have highlighted are software charges and amortization. So the benefit of this on EPS wouldn't be there for 6 years or so you are highlighting. So we need to assume that at the current volumes it is the same, but as the volumes increase, we should be seeing incremental thing, right?
Yeah, that's right. That's right. As we go, you're right, madam. You're right.
Yeah. So for the current volume, it is same, but as the volume increase, we should be seeing even at the EPS level, because if it were our older contract, the variable cost would have increased along with the volume, but here incremental there won't be any cost.
That's what I said. So that impact has come now also, but unfortunately, because of this a lumpy payment of 60 plus 80 kind of thing, 81 kind of thing, that is completely lost. But otherwise, you would have seen that kind of thing.
Okay. So one last question, if I may ask. So this higher other income which we are seeing this quarter and the previous quarter, so this is largely driven by what, sir? I just missed in the earlier question.
By the transaction charges that we have earned on options, largely by options.
Actually, other operating income is also high in these 2 quarters.
That is basically on the margin money that we have received from members, as part of our clearing and settlement operations, which is then deployed into short-term instruments.
Oh, okay, got it. So is it because of we have higher margin requirements now that this increased?
Not margin requirement. Volumes have gone up means more margins will come. So more margins means, again, if it is a cash margin, then definitely you earn more.
Okay, got it. Thank you so much, sir. Thanks for the opportunity.
Thank you. Next question comes from the line of Rajesh Mehta, an individual investor. Please go ahead. Mr. Rajesh, please go ahead with the question. The line of Mr. Rajesh has been disconnected. We'll go ahead with the next question and comes from the line of Pratik Dharamshi from Safe Enterprise. Please go ahead.
Thanks a lot for giving me the opportunity. Just a couple of questions from my end. So in terms of payments to TCS, so can you quantify how much money we have already paid to TCS for software as well as hardware so far?
Hello?
Yeah, am I audible?
Yeah, you're asking how much has been paid?
Yeah, so how much have we paid to TCS? Can you quantify in terms of software charges, hardware charges so far?
No. I don't think we can. See, as we have been saying that the contract is confidential. We can't be. If I disclose it now every quarter how much we are paying incrementally, then you will know that full price of the contract. I think it's not advisable to disclose it in this manner.
Fair.
But overall, whatever is the IT expenditure, it contains in that. That's the way it is.
It's all part of our CWIP.
Sorry, part of?
Part of our CWIP.
Oh, okay.
That's a work in progress. Yeah, that's it.
Okay. And the second one, you mentioned by June you should be through with the transition to TCS, right? Am I understood as well?
That's right.
So within the 2 quarters from now, you should transition to TCS. That's the timeline you are setting.
Yeah.
Understood. Yeah. Thank you very much.
Thank you. Next question comes from the line of Jainam Gilani from Stallion Asset. Please go ahead.
Hi, sir. Hello.
Yeah. Please go ahead.
Yeah. So I just have one question. Most of my other questions have been answered. So how do we plan to diversify the product risk and options? Because as of now, I guess mainly we are quite dependent on energy contracts, right?
Yes.
How do we plan to diversify this? Like, are we planning to get in other products too? Other commodities in the option?
Yeah. If you see that some traction is seen in the gold options as well. You may have seen it. But then it's a bi-monthly contract and the volume, this is very big. And that's where the premium will be higher. We propose to launch the monthly contracts. I think once the system updates are done, then we would like to launch that also. We have received the permission as we have last time also told, but then that its holding is back.
Okay. Thank you.
Thank you. Next question comes from the line of Amit Chandra from HDFC Securities. Please go ahead.
Hello. Thanks for the opportunity, sir. And so most of the questions around the technology transition has been answered. But just to understand how confident are we in terms of transition that has to happen in the next quarter, and also in terms of the total around 500 members that we have, how many of them have started the mock trading, and is there any issues in shifting the smaller brokers to the platform, or mostly some of the larger ones, the large members have already shifted to the new platform?
See, as I have said that almost all 380 plus have already participated, who accounts for 90% of our business. So that's not an issue in that sense. And we need to say clear a roadmap to them, telling them that by such and such date we will be moving, and if you prepare yourself, is something which we need to declare. So that we will do it after the steps that I have already enumerated earlier are done, and that is what we are working now. And maybe the performance fine tuning and other issues will be addressed. Then thereafter we will be able to release the plan of action for rollout or for going live. But it has to happen before the 30th June, no doubt about it. I think we paid through the nose, and I don't think any one of us can justify anything going beyond this.
Okay. So as per the regulatory requirements, is it required that all members should shift to the new platform? Then only we can start with the new platform, or we can shift with some of the people being on the old platform, or we can cancel their memberships or something of that sort. So as per the regulator, what is the regulation in terms of the shift?
Look, irrespective of regulation, I don't think there's any specific regulation. You need to give adequate time to the participants. So from last year, May, June onwards, we have been telling them what will be the file formats and etc. So adequate notice has been given, and some of the members, if they are left out, they are left out. We can't help it. But this is what the solution is. Maybe those ones who are thinking that the commodities business is marginally adding, whereas the shifting to a new platform will add to their additional costs, then they may choose not to join, but then it is up to them. We can't, assess for them in that sense, or we can delay for them.
Okay. And sir, on the options, so you mentioned the active participations around like 3 lakh, 3 lakh people are trading on options, and that number has almost like tripled YOY. And there is a similar number for futures, right? So around 3 lakhs YTD for options and futures. So, what is the overlap between these options and futures? So is it like unique option traders, or there is overlap between options and futures?
There will be some overlap, no doubt about it, but we don't have immediately those overlap numbers. But there will be overlap, no doubt about it.
And this still is like around 3% of the total UCCs that we have. So, is there a chance that this can go up? Because if I see the total volumes, the active trades per active participation comes around 2 lots, roughly 2 lots, like per. So, which is small as compared to what is there in other exchanges. So, can this increase, or we can see this increasing the active UCCs almost doubling from here on also?
I think one is that cross-market comparisons is it's like comparing apples and oranges. The reason being that ours here, it's one lot contract. Buying one contract means one lot. One lot means it is few lakhs. Unlike in equities, you can buy 1 share and 2 shares or 10 shares, 50 shares. So there any number of participation can come, that cannot come here. The margins they have to pay for each lot. Even if it is a 10% margin on 3 lakh or 5 lakhs, minimum is in this range, and it is 30,000 to 50,000 rupees. Get stuck in just one contract. So let's not draw that comparison for the sake of proper analysis of what we are talking about. The second thing is, as explained in some of the previous calls also, the total number of UCCs uploaded is not the right benchmark against which we should be doing it, because member brokers now are unified member brokers. So when they are taking the client's consent, they are taking the client's consent across all products and then uploading in all the databases. So who knows, tomorrow the client may choose to trade in commodities, so need not call for additional set of data and information or papers. So that is the reason why the members are doing that. So my suggestion would be that we need to see what is the growth we are making, how much incrementally we can increase the growth is what we are all focusing, than setting our eyes on the total. That's the way I approach this subject.
Okay. Okay, sir. Thank you, and all the best.
Thank you. Next question comes from the line of Amrish Kakkar, an individual investor. Please go ahead.
Many thanks for the opportunity, and most of my questions have been answered. Just one relating to SGF. Is there any visibility you can provide us on the latest status on RMRC's decision on fungibility of the SGF?
SGF is about 570 plus 75 crores or something like that. How much is exactly? 580 crores.
Not the amount, the decision on whether we can take money out of the
Yeah, I think something of that kind, I understand. Something of that kind was discussed. That's what our clearing corporation people who attended the meeting of RMRC. But unless the minutes come and final decision come in the form of a circular, we do not know what exactly the outcome is going to be.
So we should expect maybe in some time we'll hear something.
Hope so.
Hope so. Thank you. And all the best with the transition. Good luck to the team. Thank you very much.
Thank you. Next question comes from the line of Sankit Koda from Avendus Spark. Please go ahead.
Thank you for the opportunity. Sir, on this mini contract, I just wanted to understand that when you have applied for the SEBI approval, it is only for the futures, or you will launch them in the options too, especially in the base metals, which is not there today.
Well, at this point in time, we ask for the futures, because for launching options, you need to have underlying futures act too, and there should be a minimum turnover of so much. Then only you can ask for this one options.
Got it, sir. And sir, second thing, I think this question has been asked. This 26 crores other operating revenue. Can you tell me how much of that 26 crores is the money made on margin money, float on margin money, interest income on margin money?
Around 17 crores.
17 crores. Perfect. And finally, sir, just wanted to understand, sir, the SEBI has floated a white paper on block of margin money, which is like an ASBA for the secondary market. So if it gets implemented thoroughly, then do you see, for exchanges also the float income almost disappears, or there is, though it is optional, assume everything goes ASBA way in the secondary market too, then the risk to the margin money, which 17 crores what you have in the current quarter is there?
See, the ASBA model is for the not the margins. I understand margins have to be deployed with the exchange anyway. I think this is maybe related to the pain and payout related model. But it's being worked out. It's being still discussed. And yes, if you really say in that sense, let each investor maintain an escrow account kind of thing with the banks, and then put all the money there, and then only exchange or clearing corporation will access it as and when there is a default. Otherwise, it will remain there only. Yes, you are right. It may happen. Okay, but we need to look at the operationalization of it, how they were going to operationalize. Let's wait and see. Maybe it is too early for us to understand the model.
Got it, sir. And finally, sir, this again on 63 months, but see, we are paying almost 65 plus 45, which is like 180 crores extra. So to 63 months over three quarters, and I believe TCS cost might be best case 1.6 or 1.7x of the extra amount what we are paying to the 63 months. So in the hindsight, if you see, then the what potential saving which we would have done seems to have not played out because of the delay in 63 months. So I know this question has been asked in different ways to you, But honestly, we have not achieved ultimately the end objective which we wanted to have a fixed kind of a cost model rather than linked to the turnover cost.
Well, you see, we embark on a good intention to implement it on time and then bring in savings to all stakeholders. But somehow we missed the target here. And but then it should be behind us is my firm belief, and that should not pull us down. And as I said, I repeat also, our focus is not we are now paying to 63 moons. It's gone for me. And what our focus should be to increase our top line and keep all other costs under control. If these two are done, I think we are done. Of course, as technology platform we will implement. That's what it is.
Got it, sir. And last one, sir. See, if 63 moons was a normal contract in third quarter, as it was in 2Q, then probably we would have made 85 crores of profit. But I think in one of the questions you have answered that if we would have been at TCS contract, the profit what we would have made would be 92 crores. So should I make an assumption that if we would have been on TCS contract today, in third quarter, the extra profit we would have made would be closer to 7-8 crores?
See, another thing, this is subject to EBITDA, to the depreciation. So what MD said is before EBITDA, right? So the amortization factor would also come in, right, for the new project. Yeah, I think just keep that in mind because the depreciation factor also has to come in.
Okay, sir. Thank you. That's it from my side.
Thank you. Next question comes from the line of Sanjay Kumar, iThought PMS. Please go ahead.
Hello. Hi, sir. First is on the income from the margin, and if you could help us, model these numbers going forward.
Sorry?
The 17 crores income from margin money, it's been going up for the last 2 quarters. Is that a way to model?
Yeah. Earlier quarter it was around 12 crores. So this quarter it is around 17 crores. So the margin money is in the range of 1,000 crores in cash, right? So that as per the SEBI guidelines is then deployed in liquid overnight funds or in fixed deposits, right? Or that is where it is deployed.
So this will track the options growth, is it?
It is essentially to fund the additional activity that is taking place, which is triggered by volatility. Not necessarily for options. It is just money is available for trading in any products, features or options.
Okay. Thank you for that. Second, IEX is talking about policy advocacy to create a framework for setting up a coal exchange. So if you could help us understand what does it mean for us, since we are also talking about coal exchange as a key growth driver going forward.
Well, the directions of the Ministry of Coal are still awaited. They are also working. They have appointed a consultant and who will be giving the framework. And in one of the conferences, it was mentioned by the Coal Ministry official that the framework will be ready by the March. Then thereafter they can look at it. Meanwhile, we have requested SEBI to give us in principle approval. So that's the status at this point in time.
But will both IEX and MCX be allowed to operate?
No, that we do not know. You see whether Coal Ministry wants only one exchange to run or anybody can compete. Maybe anybody can compete, but MCX has a what you call MOU with M Junction. So that's the way at this point in time the relation is defined. Relationship is defined.
Okay. Next, so there were news articles about MCX requesting support from SE for using their platform and allegations or possibilities of a reverse merger. So any comments on that we shareholders should know about any of these?
You see, tying up a technology, alternatives we were all exploring, but then that's all behind us. There's no point in dwelling on these issues now. Okay.
Okay. And any transaction fee hike post new platform from the current 2.1 lakhs for futures and 1 lakh for options?
And we are not looking at it. I think it is too early for us to give any kind of guidance on this.
Okay. And so if you get the electricity derivatives approval before June 2022, will we launch it in the current platform, or that will be deferred?
I think we should be able to launch, because in both the platforms it has been provided for.
Okay. Final question on currency, sir. So any plans of getting into currency derivatives since it complements commodities?
We are yet to get hold of one trading platform first, then we can look at other platforms, other products later. But yes, your thought is good in that direction, and that's the way one should think through. Yes.
Okay, sir. That's it from my side. Thank you and all the best.
Thank you. Next question comes from the line of Anshuman Deb from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. My question is regarding, I remember we were discussing that the software cost which comes above EBITDA would be materially low compared to what was there earlier. So the depreciation would be that high to make the overall cost equal to what was there till September 22. That is my first question. In a way, I'm trying to understand that this was all the way our guidance, that the PAT level, there will be no change for the next 10 years if we shift the technology.
No, not for 10 years, as I said, for 5 to 6 years. That's what the agreement is for. And thereafter, it's only we pay a very AMC, which is very basic, very single digit AMC. If you pay, then you can use it on your own. That's it. There's nothing else in that. But why this is so going to be high is completely entire hardware is getting replaced, because the hardware what we are having and one needed for the TCS platform is totally different. So that's the reason why it's going to undergo change.
This will also be amortized. I mean, the hardware is generally amortized over a period of 5 to 6 years, while the software maybe we can, again for 6 to 7 years. So that's why it's the amortization, depreciation cost would be high.
Right. So thanks for your detailed answer. I just wanted to verify that there has been no time during the last 6-7 months that there has been any change in the TCS terms and conditions, right?
No change in the terms and conditions.
Okay. Thanks a lot, sir. Thank you.
Thank you. The last question comes from the line of Subramaniam Iyer from Morgan Stanley. Please go ahead.
Yeah, thanks for the opportunity. Sir, actually just wanted a clarification on the question the previous participant asked. Basically, why do you say that for the next 5-6 years we will be at the same level? Because the depreciation will be a fixed number, right? I mean, once you decide once the capex is known and the duration is known, and also the fee amount will also be fixed. So that part I didn't follow.
No, I'm sorry. See, the way that I'm looking at is the cost component, cost attributed to technology will be two. One is the variable, and here the variable will not be there, but then in the form of huge depreciation, it will come. And AMC, some maintenance charges will be there, which will be again a fixed item. So these are the two items come. And irrespective of your top line, this one is going to be top line in terms of revenue from operations will be fixed. Yes, but the only element, as earlier also we discussed, is The variable component will not be there. To that extent, the current charges, whatever we are paying to the 63 modes is what we are comparing with the TCS contract. But if the present volumes increase double, okay, today you are having a 30,000 or 31,000 crores of options. If it goes to 60,000, had the previous platform continued and we would have paid more of that one, that element will not be there. I am talking about at this given volumes, they will be balancing out.
Okay. So basically, the 6 years you are saying is because you plan to amortize the capex over a 5-6 year period. So after that, is that right?
In 5-6 years, we will be having a huge growth. So obviously, you will not. You would not have had that. Maybe a part of it would have gone to the payment of fees to the vendor had it been a linked to the volumes. That's right.
Understood. And sir, given that in two quarters from now you would anyway be on the TCS platform, what prevents you from giving a broad, estimate of what's the ultimate capex going to be and the ultimate terms and conditions? It would just prevent so much confusion, right?
I think we will do maybe sometime in the first quarter of next year. We will do that definitely.
Okay. And one last clarification that I would like to take. So given that you have a liability clause with TCS as well, so if TCS delivers the platform on, say, in July, do they still have some liability, or is it only if they delay beyond July that the liability comes into play?
No. Already liability has kicked in because we were to be delivered by July last year. So September also they couldn't deliver it. So that has kicked in. Okay, but we will see when to invoke. That's the way it is.
Understood. And would that be, I would say, reduced from the 160 crores that you are going to incur in the next 2 quarters, or basically you might just take it in the capex? I mean, you'll adjust it against the capex.
How we recover, where do we adjust, and other thing is not a material point. But we need to maintain. We can't burn the bridges with the new vendor also. Okay, and we need to maintain good relations to ensure that this platform continues. We get that good service from the new vendor also, and we will see how to approach it.
Understood. Thank you and wish you all the best.
Thank you so much. Okay.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to Mr. P.S. Reddy for closing comments.
Yeah. Again, I thank all of you for patiently following this call, and stay invested. And we would like to do our best, whatever that we can do, to ensure that the company does better quarter after quarter. Thanks to all of you. Thank you very much.
Thank you. On behalf of MCX, that concludes this conference. Thank you for joining us. You may now disconnect your lines.